Hello everyone, my name is Komar Yadi Ajana Saputra with sequence number 1 and my last 3-digit student number is 005. Stakeholder engagement is an important element in sustainability reporting. It shows how company identifies, communicate with, and respond to parties affected by its business activities. In the banking industry, stakeholder engagement is even more important. Banks contribute not only through the internal operation, but also through financing decision, investment, digital services, customer protection, and also community development programs. As financial intermediaries, banks' decisions can affect various stakeholder groups, including customer, employees, regulator, investor, business partner, and also the general public. In this report, PT Bank Mandiri Persero Terbuka issues a case study to analyze stakeholder engagement in sustainability reporting. In its 2025 sustainability report, Bank Mandiri adopted the theme Shaping a Sustainable Ecosystem Synergy for Sustainability Leadership. This theme reflects Bank Mandiri position as part of an ecosystem that supports Indonesia's transition toward a low-carbon and inclusive economy. Bank Mandiri also explained that building an integrated sustainability ecosystem requires collaboration with various parties, including business, regulators, investors, communities, government agencies, and also international organizations. In this sustainability agenda, stakeholder engagement is part of a materiality assessment process. Bank Mandiri involves several stakeholder groups, such as employees, communities, customers, and also academics through materiality questionnaires. So this shows that stakeholder engagement is not only used as a communication activity, but also an important part of determining material and relevant sustainability issues to be reported.
Hello everyone, my name is Darren Christian Gomez Sargi with the student number 2307-3962. For my part, I'll be explaining the analytical framework and the reporting standards. The analysis of this report is carried on 3 theories. First, stakeholder theory, which explains that a company's long-term success depends on creating value for everyone and not just shareholders. This allows sustainability reporting to be used for genuine two-way dialogue. Second, legitimacy theory suggests that companies operate under a social contract with society, so their reports often use engagement narratives to gain or repair legitimacy, and this helps to see whether the engagement is substantive or just a symbolic act. Finally, impression management explains that management may selectively frame their engagement to influence perceptions and hide power imbalances or tokenism. Together, these 3 theories give us a proper theoretical structure to judge the depth, motive, and truthfulness of what the company reports. To put these principles to verifiable practice, we look to establish global standards. The GRI Universal Standards, specifically GRI 229, require companies to describe how they engage stakeholders, including the methods, frequency, and how that feedback is actually used in decisions. Then, GRI 3, for material topics demand that stakeholder input directly shape the report priorities to prevent engagement from being just a peripheral add-on. Finally, we use the AEA 1000 Stakeholder Engagement Standard as a strong benchmark with its principles of inclusivity, materiality, and responsiveness that test whether the company's claims of engagement are real, as it asks for evidence that stakeholder concerns lead to tangible changes. That is all for my part. The next part will be explained by my friend.
Hello, my name is Jessica Venamenko with my last 3 digits of student ID is 180. In this part, I'll be explaining how we actually analyze Bank Mandiri Sustainability Report, specifically the method that we use to evaluate their stakeholder engagement disclosure. So we use something called qualitative content analysis. Basically, instead of just checking what's written in the report, we also look at how meaningful that information actually is. Because a company can technically disclose something, but the quality can still be really shallow. Our main resource is Bank Mandiri Sustainability Report 2025, pages 115 to 119. And to evaluate the report, we use 3 main frameworks as our benchmark, which is GRI 2 to 29 for stakeholder engagement, GRI 3 to 1 for materiality assessment, and AA 1000 stakeholders engagement standard, which cover 4 principles, which is inclusivity, materiality, responsiveness, and impact. For the actual analysis, we came up with 12 disclosure items based on those framework, and each item gets a binary score, 1 if it's disclosed and 0 if it's not. But here's the thing, just because something is disclosed doesn't mean it's actually good. So we also added a critical comment column to evaluate the depth and quality of each disclosure. So you can see the full breakdown in the Excel file we attached in our paper. Out of 12 items, 9 scored at 1, so around 75 were formally disclosed. That sounds okay, right? But when we look closer, the picture changes. 3 items were completely missing from the report, which is identifying vulnerable stakeholders, managing conflicting stakeholders' interests, and a feedback loop. Meaning, does Bank Mandiri ever actually tell stakeholders what happened with their input? Turns out, no. And those 3 gaps are just minor details. They go straight to the core question of our research. Is Bank Mandiri stakeholder engagement genuinely accountable, or it is just more looking good on paper? The next section will dig into that.
Hello everyone, so my name is Daniel Sanjayo with student number of 230731139, and today I will explain Bank Mandiri's stakeholder identification and engagement mechanisms based on its 2025 sustainability report. So, to start, Bank Mandiri identifies many important stakeholders within its sustainability activities. So these include like customers, employees, shareholders, investors, regulators, government institutions, suppliers, MSMEs, communities, and international organizations. And the report shows that the company tries to involve many groups that influence or are influenced by its business operations. And customers are one of the main stakeholder groups, that is especially through digital services such as Live-in by Mandiri and also Live-in Merchant. Employees are also strongly emphasized through training programs and diversity initiatives and employee development activities. Meanwhile, investors and shareholders are mainly connected to ESG performance, sustainable financing, and sustainability bonds. The report also discusses communities and vulnerable groups indeed, particularly to the MSMEs, non-urban communities, and financially underserved populations through financial inclusion and CSR programs. However, the disclosure is still limited regarding communities directly impacted by financing projects or other vulnerable groups such as indigenous communities and people with disabilities. In terms of engagement mechanisms, Bank Mandiri uses several communication channels. So this would include sustainability reports, investor relations communication, digital platforms, CSR activities, financial literacy programs, public contact services, and collaboration with regulators and industry associations. However, it is also important to still critically evaluate the engagement practices that is done by Bank Mandiri. Although the report presents many stakeholder engagement channels, not all of them are actually necessary to represent the meaningful two-way dialogue. Many activities appear to focus more on delivering information rather than allowing stakeholders to actively participate in the decision-making process. So, to conclude the stakeholder engagement, overall, Bank Mandiri demonstrates relatively comprehensive stakeholder identification and communication practices. However, the report is still providing limited evidence for deep stakeholder participation and genuine collaborative engagement. So I hope in the future Bank Mandiri will do more to this part. So that's all from me, Daniel Sanjayo. Thank you.
So, good afternoon everyone, my name is Fatir Tegenca with my last 3-digit number 275. I will discuss from engagement to accountability, materiality, responsiveness and decision making in Bank Mandiri 2025 Sustainability Report. So, Bank Mandiri explained that stakeholders engagement is part of sustainability governance and materiality assessment process. The company involves several stakeholder groups such as customers, employers, regulators, investor communities, academics, and business partners. According to the report, stakeholders' input is collected through questionnaires, discussion, and engagement channels to identify important sustainability issues, including climate risk management, sustainable financing, financial inclusion, and governance transparency. This shows that stakeholders' engagement is formally integrated into the company's sustainability reporting process and analyzed with standards such as GRI 3 and AA 1000 SES. However, the report still has some limitations regarding accountability and responsiveness. Although Bank Mandiri described many engagement activities, the report provides limited explanation about how stakeholders concerned actually influence the company decision and policies. For example, the report does not clearly explain how stakeholders' input is prioritized, how confusing stakeholder interests are managed, or how management responds to specific concerns. In addition, there is limited discussion about feedback loop, meaning stakeholders are not clearly informed about how their input is followed up or translated into measurable actions. Overall, Bank Mandiri's sustainability reports demonstrate the stakeholder engagement is procedurally embedded within its reporting framework. However, the disclosure is still less confusing as evidence substantive accountability because it focuses more on engagement mechanism and sustainability achievement rather than measurable organizational response. Therefore, the disclosure reflects both accountability efforts and legitimacy-oriented communication aimed at strengthening the company's sustainability image and credibility. And I think that's all from me. Thank you.
Hi everyone, my name is Aurelia Zahanur Shabila with sequence number 3. So based on the analysis of Bank Mandiri stakeholder engagement that we provide, Bank Mandiri demonstrates relatively structured stakeholder engagement practice within its sustainability report in 2025. The company identifies various stakeholders, including customers, employees, regulators, investors, communities, suppliers, and medium-small enterprises. In addition, the report explains several engagement channels such as surveys, meetings, digital communication platforms, investor relations activities, and sustainability reporting, also CSR programs. At a surface level, this disclosure indicates that stakeholder engagement has been integrated into the company's sustainability governance. This is also supported by the content analysis result, where most stakeholder engagement disclosure items were identified as disclosed. Furthermore, Bank Mandiri aligns its reporting practice with frameworks such as GRI number 221, GRI 3, and AA 1000 SES, and also POJK number 51, year 2017. However, from a critical perspective, the existence of disclosure doesn't automatically prove sustainability accountability. One major issue identified in the report is that the disclosure focuses heavily on engagement activities and communications mechanism, while providing limited evidence regarding how stakeholder input directly influences strategic decision-making or financing policies. For example, the report explains that stakeholders' input is considered in the materiality assessment process. Nevertheless, there is limited explanations regarding how conflicting stakeholder interests are managed, how criticism is addressed, or how management responds to negative stakeholder feedback. As a result, the responsiveness dimensions emphasized in AA 1000 SES appears relatively weak. This finding suggests that stakeholder engagement may partly function as legitimacy-oriented disclosure. According to legitimacy theory, companies often use sustainability reporting to maintain public trust and strengthen corporate reputation. In the case of Bank Mandiri, broad disclosure regarding stakeholder engagement and ESG initiative may help reinforce the image of the company as a responsible financial institution. The report also strongly emphasized positive sustainability narratives such as ESG integrations, financial inclusion, and sustainable financing commitments. However, there is limited discussions regarding sustainability challenge, stakeholder dissatisfactions, or tensions between profitability and sustainability objective. In addition, vulnerable or negatively affected groups receive relatively limited visibility within the engagement disclosures. This selective transparency raised questions regarding whose interests are prioritized in the reporting process. From the perspective of impressions management, sustainability reporting can function not only as accountability communication, but also as a strategic tool to shape stakeholder perceptions. Therefore, while Bank Mandiri demonstrates genuine sustainability efforts, some disclosures still appear symbolic and reputational in nature. Overall, this report concludes that Bank Mandiri's stakeholder management engagement reflect a combination of substantive accountability and legitimacy-oriented disclosure. The company shows meaningful progress in sustainability reporting and stakeholder communications, but elements of selective disclosure and impressions management remain visible. So, to improve the credibility of future sustainability reports, Bank Mandiri should provide clearer evidence regarding how stakeholder feedback directly influence company decisions and sustainability strategies. The company should also strengthen transparency regarding sustainability challenge, negative impacts, and conflicting stakeholder interests rather than focusing mainly on positive achievement. In addition, future reports should include more outcome-based indicators to demonstrate the actual social and environmental impacts of stakeholder engagement activities. That's all from us. Thank you very much and have a nice day.